Alright, hello everybody. In this video, we're going to cover trading psychology, and I'm just going to go off the top, getting into various topics surrounding trading psychology and how you can transform your mind to sort of think like a professional. So let's get right into it. Trading psychology. So what are some of the flaws that hold traders back? And we're going to get into why, how, and what to do about it. So number one, let's begin with fear. Traders have a fear of losing money, being wrong, missing a move, etc. And so this is the problem. So a lot of the times when traders have fear, it's fear of losing money, number one, which means very simple. You're over leveraging. If you cannot accept the risk that comes with that trade, then it means you're over leveraging. It means you're risking far too much than you're willing to lose. And it means you need to size down. And if it comes to it, size down to the lowest possible sizing possible. And then you go to number two, fear of being wrong. Now this one cuts a bit deeper. Because the fear of being wrong is not a financial burden. The fear of being wrong is more of an ego-driven, prideful, and perfectionist-driven flaw. And so you need to understand that being wrong is a part of trading. Being wrong is not something that you can avoid in trading. You're going to take losses. It's inevitable. And let me write that down. Losses are inevitable. Meaning you're going to take losses. So accept it. And invite it, because there are opportunities to learn. Accept being wrong. Accept it. Invite it, because there are opportunities to learn. And when you have an edge, you see a 70% win rate, let's say. Well, that means that 30% are going to lose. And so 3 out of 10 are going to lose on average. And so when that comes, you're just playing your edge, and that's what comes with it. So you have to accept it. You're going to be wrong. That's what the edge is. The edge will give you great trades and it'll give you wrong trades. And you have to stay the same through both. Stay the same through both wins and losses. Because that's all you can do. What's the best thing you could do to put yourself in the best position to win as a trader? Well, it's by remaining the same, staying consistent through both wins and losses. It doesn't matter if you're on a winning streak or on a losing streak, because you're just following your model. And that's what matters in trading. What is the best way to put yourself in the best position to win as a trader? You're scared of taking losses. But how can you put yourself in the best position to minimize those losses? Well, it's by following your model, following your edge. Because deviating and anything contrary to that, you're inviting more losses and you're inviting more damage to your career. Because you have a model. And with that comes losses, right? But you think that you can eliminate losses by deviating from that model? It doesn't work that way. In fact, you're putting yourself in a worse position that way. The best thing you can do as a trader is follow your model. Because you're doing your job. That is your job as a trader. And so going against that, because you're scared of losing, will invite more damage, in fact. And it will invite more losses. You think that somehow deviating outside of your model because you're scared to take a loss is going to fix anything? Well, no. It's going to make things a lot worse. And it doesn't matter if you somehow got lucky and made a win deviating from your model. Because you're establishing very poor habits and you're going to do it again. And eventually the market will have its way with you. And so that's why you need to remain the same through both wins and losses. You take a win, full take profit, following my model, that's the model panning out. You take a loss, stop loss hit, that's my model doing its odds of probabilities. It's just panning out. That's what it is. And you just move on. Because anything deviating from that is going to invite a lot of damage to your career. And last but not least, fear of missing a move, FOMO, fear of missing out. When your model shows up, you are to take the trade. If it aligns with your analysis, let's say your bias, then you are to take that trade. But let's say you miss your entry and price has gone 20 points from your entry in profit, but you're not in that trade. Are you going to chase it? Do not chase. No, you're not going to chase it. Why would you willingly put yourself in a worse position than you need to be? Why would you willingly do that? And that applies for all 3 points here about losing money, being wrong, deviating from your model, and chasing price. Why would you put yourself in a worse position than you need to be, getting a worse entry than you need to have? If you miss the move, you analyze, you watch it. If you get a valid entry along the way and the risk makes sense, perhaps you can take an entry. But it has to make sense, and you have to have backtested this time and time again. Not just taking a random entry because you think price will go somewhere and it's already going and you miss your initial entry, so you're just going to try and get in there. That's not how it works. You miss your entry, you analyze the trade. It's not the last time the model's going to show up. And so if you missed that one and it went to full take profit, hey, that's what it is. You should be happy that your model's panning out because it shows that your model's working. And you didn't get to get in on it. You made a mistake. And that's okay. You go in your journal, you write it down, you talk about the mistake, you talk about what you're going to do in the future to improve, and the next time it comes, you're on it. You're sharp. You're there. But it's not going to be, oh crap, my entry here on this inverse gap was right there. I was scared to take it. And it's panning out. Now it's 25 points in profit. Okay, let me just enter now. I'll take on the risk. It doesn't work that way. You missed the entry. That's it. That's all. You don't have the trade to take. Because chasing price is not going to do anything for you. You're establishing very poor habits. Because then you think it's okay to FOMO into trades. And it's not. Either you enter when your entry forms. And if you miss it, analyze accordingly. And then the next time it comes, you're ready and you're sharp. And you'll enter that time. And so that's how it works. Let's get into greed. So what are the symptoms, some of the symptoms of greed? Well, number one, it's obviously wanting more, not satisfied with the results that you have, and impatient. Impatience. These are some of the problems. And so wanting more, which ties into not satisfied with the results, why is that extremely detrimental? And you'll see a lot of traders do this. They take a trade, they have their take profits set. Price goes to those take profits where they should be scaling out, and they want to just chase more. They want to extend their profits, push their edge, try and maximize how much they can get so they can catch the top of price before it reverses. Why would you do that? Why would you do that? Think about how stupid that sounds. Price is at the point, through your backtest, through what your model tells you, that you should take profit right here. And you're telling yourself in that moment, momentary emotions overriding your plan. No, let's extend that take profit. Let me try and push the edge. And then price reverses from that point. You don't get the profits that you were looking for. And now you're on tilt. and you're chasing moves. And now you're inviting so many more flaws into your trading, like impulsiveness. All because you couldn't take profit where you had to, because you wanted more. You weren't satisfied with the results. And think about how stupid that sounds. You're at the point where your model's telling you, hey, this is where we take profit, whatever your name is. This is where we take profit. Let's go. Scale out. No, I want more. And that's the very thinking that's going to bring a lot of damage to your career. Where your model tells you to take profit, through back tests, you take profit. I don't care if that trade made you $50, $100, $1,000, $10,000. I don't care, because that's not your worry. That is not your focus. You don't look at the P&L. Stop it. Take your P&L out of your trade if you need to, if it has that much of an effect. You should be looking at your levels, where to scale out, and when the trade is complete, then look at your P&L. And whatever it is, it is. You size in with 5 contracts, let's say. Partials, let's say, tells you to take out 2 or 3 contracts. And you leave the runners for full take profit, whatever it may be. 1 contract at partials, 4 for final take profit, whatever it may be. That's what you do. That's it, that's all. And so you're not satisfied with what it is, and you're pushing your edge. And you're aiming at a place that you would never aim if you weren't looking at your P&L. If you were not looking at your P&L, you would take profit where your strategy is telling you to take profit. But you're looking at your P&L and you're letting that dictate how you trade. And that's going to cause a lot of damage to your career. Where your model tells you to take profit, you take profit. You don't think twice. Because that's what following your model is. So you're not focused on P&L. You're focused on establishing proper habits. And pushing your edge, moving your take profit farther to try and catch the top or get more, is establishing very poor habits. And it invites so many more flaws if you don't get away with it. And you won't get away with it over time. Eventually, where you're going to take profit and you push your edge, price will reverse and you're not going to get the profits you were looking for. And then you're going to invite a lot more flaws. And I understand you want to get those results. I get it. But how is deviating from your model going to bring you any closer to those results? It's not. It's bringing you much farther. But you think in the moment you trick yourself and tell yourself, hey, look what I can make if I bring this take profit here. Yeah, but that's not the reality of what your trading model looks like. That's not the reality of what your proper habits look like. That's not the reality of consistent trading. And so you tell yourself this lie. And next thing you know, you're trading with horrible habits. All because you were greedy and couldn't follow a model because you wanted more. And guess what? A stomach that you keep feeding and keeps wanting more will never be satisfied. Because you might move your take profit a bit one more time, and the next time it'll be a lot more. And that stomach that you're feeding that keeps wanting more, telling you, hey, let's push our edge, hey, let's keep trying to get a bit more, let's try and get away with it. It's going to want more and more and more, and it will never be satisfied. So instead you tell yourself, hey, my model tells me to take partials here. I don't care what the P&L looks like. That's not my focus. My focus is on following my model, trading with good habits, proper risk management, and letting time do the heavy lifting. Trusting that over a long period of time, it will pan out. And so I'm not going to be impatient. I'm going to let time do what it has to do with my model. All right, so there's fear, there's greed, and there are several other psychological flaws that we can get into, like over leveraging, which plays a part into greed, like FOMO, which plays a part into greed and fear. And so we could get into risk management, how that plays its part. We could get into, well, we already talked about chasing a move. And so what I want to get into is a lack of trust in your model. If you lack trust in your model, how do you forge that trust? How do you gain that trust in your model? What is the number one thing you need to do to see the model pan out so you can gain that confidence that your model is truly there? Back test. Go back. Go look at historical data. Go back in the charts over the course of months, years, and see your model pan out time and time again. And so when you see it through backtest that your model is there and it hasn't gone away, it hasn't died down, it doesn't do that. It goes through cycles. And when you see your model is truly panning out and that over the course of time it has this hit rate, this R to R on average, this is what the profits look like. Well, that's how you're going to gain that trust in your model, because you're seeing it pan out in price. It's there in the market. So how can you lack your own eyes? How can you lack something that is there? How can you lack trust in something that is showing you it's panning out time and time again? And so a lot of people do lack this trust in their model. And so you have to backtest. See it for yourself. See that it's panning out. See that it's profitable. And if you see in your backtest that you know it's profitable, what is that telling you? It's very straightforward. What are you seeing then? If your model's profitable and you aren't profitable as a trader and you're seeing through backtest that your model does bring profits every single month, what can you derive out of that? What is the main lesson there? Your strategy is not the problem. If you see through backtest your model is bringing in results time and time again, it's clear your strategy is not the problem. Your psychology is. Because the model is doing what it's got to do. The model is playing out with its odds over time. The model is still showing up. And so if it's delivering results and all you have to do is follow it and you're not following it and you're not getting the profits over time that you want, it's clear you're the problem. And so the strategy doesn't need tweaking. The strategy doesn't need refining. The strategy doesn't need fixing. You need fixing. And so you need to work on yourself. Open up a doc and go through your own psychology. Dive into your own psychology. Dig deep into what's holding you back, into your flaws. Dig deep. What is the root cause of these flaws? Is it something in your personal life? Is it something that you were always hardwired to think like being a competitive person, being a sore loser, and not accepting losses? Or being a perfectionist, so expecting nothing but the best every time you enter a trade? You have to dig. You have to find out what is the problem. What is holding you back? Just like you dig deep with your model and you know your model intimately. You know your model when it shows up to the T. You know that it pans out. You've done it through backtest. It's the same thing with your psychology, and traders don't do it enough. You have to know yourself perfectly. You have to know your flaws, know your tendencies, and know to catch on to your tendencies when they begin to act up and to suppress it. You don't let it get in the way of your trading. And so a lot of traders know their model. They can identify it like this, like that. When it shows up in the charts, here's our confirmations, sweep of liquidity, change in the state, IFVG, enter there, target opposing liquidity, internal liquidity, we scale out, bang, I knew it perfectly. But if you know it perfectly and you're not profitable, what don't you know perfectly? Yourself. And that's what you need to dig into. And you have to be able to know yourself, know your flaws well. So you have to dig into what is holding you back. Through your obstacles, through your tendencies. Open up a doc and dive into it. Is it something in your personal life, in your upbringing, that caused you to think a certain way? That's been hardwired in you. Whatever it may be. Is it that in trading, when you're in a trade, you feel this certain emotion? Why? And then explain why you feel this way in trading. Explain to yourself in this doc why it's illogical to think this way and why it does more damage than good and why following your model is the best thing you could do to put yourself in the best position to succeed as a trader. That's your job as a trader. Your job is not to make money. Your job is to follow your model and follow your rules. And if you do that properly, over time, you will win. And so once you describe how illogical these tendencies, these poor tendencies, these flaws are, you break down how stupid it is and you discard it. You say, this is why it makes no sense to think this way, and I'm no longer going to think this way. We're going to overcome this because it doesn't make sense and it's holding me back. Bang, you're out of my system. I don't need you anymore. My focus is on following my model, my rules, establishing proper habits, proper risk management, and letting time do the heavy lifting. And that's it, that's all. And nothing has power over me. So that's just a bit of a rant there, but just covered a couple psychological flaws that a lot of traders do feel. And so I hope this was insightful. I hope you learned something out of this. I wish you good luck. Good trading. Reach out to me if you'd like. And take care, everybody.